Welcome back to Small Caps, ladies and gentlemen. My name is Kerry Stevenson, and today I've got a very special guest for you, all the way from one of my favorite places, Las Vegas, Nevada, over there in the US. His name is Greg Mannarino. He is the founder of traderschoice.net. He has also published a book, many books, one on casino blackjack strategies, and that got him banned from casinos, and now he's living in Las Vegas. I love this. He's been a practicing medical practitioner. He's been in the Navy. He's driven cabs. He's done it all, ladies and gentlemen. But today, I've asked Greg to come on because he's watching the markets. He understands what's going on. I want him to help us, I guess, unravel a little bit of what's going on. Gold price is starting to move. Wheat prices are insane. Nickel prices have gone to the moon. What is going on? Greg, welcome to Small Caps. Very good to see you. Thank you so much for joining me on Small Caps.
Thanks for having me. I'm so happy to be here. I'm looking forward to this for a while. We finally got together, and here we are. Yeah, we have a lot to talk about. I almost don't know where to start.
Well, let's start by just, if you wouldn't mind, it's the first time that you and I have chatted, and let's introduce you properly to my audience. I gave them a brief background, but tell us about you. What brought you to Las Vegas, and what do you do? What is traderschoice.net? How are you helping people?
Well, what I'm trying to do, look, this all started for me. Well, I don't know how far back we want to go here. I became kind of obsessed with Wall Street goings on after watching the movie Wall Street when I was a kid. And I had no idea what I wanted to do with my life at the time. I really didn't. I was this was 1987. So I was like 21, 22 years old, kind of like my parents never helped me like think about what I wanted to do with my life. They were like hippies left over from the 60s. So they were like, just be free, just do what you want. And it was not really a great way to, learn things, although they supported me and everything I wanted to do. But, my dad had got me a job at a Wall Street bank. He knew someone that worked at Bear Stearns, the bank that went down, and he got me a job over there. And that lasted for a couple of years. I'll be honest, I hated it. It wasn't really what I wanted to do at the time. I just thought I wanted to be Gordon Gekko, the guy from the movie. And, but, I moved around a little bit, got a medical degree, did practice medicine for 20 years.
Oh, wow.
Retired. Yeah, I retired from that. It just became too corporate, too non-caring. I just couldn't handle it anymore. I just had to get out. But I've always been in the market. I've always wanted to know how it works, what makes it work. And then what really got me was the meltdown of 2008, 2009, and watching people get hurt. Friends of mine, myself, I lost all the money I had in the market at the time. It's really the truth, by taking other people's advice. And I said, I would never do that again. I would never let that happen to me again. And I really started to delve very deeply into the markets and I immersed myself in it. And I mean, literally to the highest order. And I started talking about this on YouTube, and it really caught on. Hey, Greg, how did you learn this? How do you know this? And I love teaching people. When I was practicing medicine, I had medical students, and I used to love, teaching them about this and that and the other thing. It was always fascinating to me. So I like to do it. I like to talk about these things. I want people to gain a perspective on what's happening. That's really it. That's what I'm all about. I offer all my stuff for free. I want people to just get it and not get fleeced from what we're seeing right now. Expect what's coming. I mean, what we're seeing right now, pretty much, I've outlined for people years and years and years ago what we would see, how we would see this unfold. I didn't pinpoint to say we'd have another war on this date, but we all know the mechanism here. There is a very dark underside to what is going on. What people need to realize is the world is literally a stage, and it's central banks that are running it all. They run the world. And these institutions will do anything to keep their power. And their power resides in one thing: their ability to issue debt in greater and greater amounts. And if that means they have to, go engineer this crisis, engineer another crisis, and one on top of that, that's what they're going to continue to do to keep the debt-based economic model going. It demands that debt be borrowed into existence in perpetuity. It can't stop. and they will create any reason and things you can't dream about to make sure that mechanism remains in place. It's a terrible thing. I think personally, it's the greatest threat to human life on the planet. Unfortunately, we can't do anything about it. Central banks have a stranglehold on the world, and it's been getting worse and worse, and it's going to get a lot worse from here.
That's a lot to take in for the moment, the fact that the central banks have got such a stranglehold on the world. If there's nothing we can do about the stranglehold that the central banks have on the world, how can we, as non-central bank, non-politicians, non-institutionalized, help ourselves to get through this? And I guess grow, protect, and keep ourselves reasonably free. Excuse me about my voice, post-COVID.
Well, it's pretty simple, I think, honestly. I've been telling people since I started to mimic what central banks do. Become your own central bank, bet against the debt bubble, hold assets that are actual units of wealth. Now, if we have a debt-based system, which is exactly what we have, and it keeps inflating, you want to be in assets that are on the opposite side of the spectrum. In my view, these are physical gold, physical silver, more specifically. It's my favorite asset of all time. I think people should also own cryptocurrencies. I'm a big advocate with regard to cryptos. And play the market. I mean, take advantage of what's going on. That's really what I do, is I try to put things into perspective for people and say, okay, this is what's happening. This is what I think you should do. And then, but I want people to make up their own minds. If people realize that globally, we are in a hyper bubble with regard to debt, and that bubble is going to burst at one point. It's being fueled by these engineered crisis. At one point, it's going to burst, and we're going to see rates spike at a very rapid pace. We're going to see pressure on the stock market, and cash is just going to move from one set of assets into another set of assets. Yeah. And I've been trying to explain this to people for a very, very long. It's very simple to understand. Risk on, meaning cash going into equities or into the stock market. Although we are down here in the United States, the S&P 500 about 14% off of an all-time high. Nothing major deal. The market pretty much is shrugging everything off despite the war, and that's only because the debt's going to inflate. But anyway, at one point, risk on is going to become risk off, and when we come to risk off, you're going to see cash move. It's already moving into commodities. I mean, like we had mentioned, we're seeing commodities skyrocket. We got crude oil right now. WTI here in the United States is $125 a barrel, going much, much higher. There's no doubt about it. Wall Street's already betting on a commodities super spike. We're talking about crude oil, $250, $300 a barrel, commodity prices continuing to skyrocket. We've been watching wheat. We mentioned wheat in the interview that has been trading, at record high, limit up. It's been surging so fast they've actually stopped trading many times. At least 3 times they've had to stop the trading because of limit up. And I think this is a phenomenon we're going to see moving forward. Just a few weeks ago, I was telling people to buy things like commodity ETFs. One is a ticker PDBC. It's taken off. I told people to buy oil and gas producers. I mean, it's a no-brainer to me. If they wanted to, you should get into defense contractors if you feel like it. I didn't buy them. I just couldn't pull the trigger on it. And then look for bargains in the market. I think the market's going higher. I still do, despite what we're seeing now, because central banks are not done. They're not done. What we're witnessing here is globally an emergence of a two-tier society, a new demographic. Extreme haves, extreme have-nots. The wealthy and the well-off could not possibly be doing better. Sure, they're facing also these inflationary pressures, but they can ride it out. If people are earning, $50,000, $60,000, $70,000 a month, $100,000 a month, or more than that, I mean, they can certainly deal with inflation, at least what we're seeing now. But people that are earning $40,000, $50,000, $60,000 a year, well, they're in a lot of trouble. And
I think, Greg, that's the thing. What we're seeing, and what I'm looking at, is you've got the extreme wealth on one end. You've got poverty getting worse on the other hand, and the middle class is just disappearing. And it's that extreme which potentially can then turn into civil unrest and a very unhealthy society that we live in. But you're talking about a commodity super cycle continuing, and you mentioned wheat. I mean, wheat's up 75% since the beginning of the year. That's going to drive inflation. How does my audience out there, you're saying that wealth doesn't disappear, it gets transferred. So where's the transfer going to go from and to?
Well, like I said, you could take advantage of these things, at least the rising prices of commodities by looking at an exchange traded fund.
Mm-hmm.
There are many funds out here that have a basket of commodities in them. One of them is, at least here in the United States, one I like and I recommended a few weeks ago is the ticker PDBC.
Say that again. The ticker code was which?
PDBC. Yeah.
PDBC.
Okay. It's one commodity. There's a bunch of them out there. That's just one that I happen to like. You can look at energy. You look at, like I said, oil and gas producers. You can look at crude oil itself here. There's many ways to capitalize on that too. But it's very sad what we're seeing, and I think it's very expected. Many of us have seen this coming. Surging inflation, a world where the entire middle class is literally being evaporated, and they don't do anything about it. They just sit back and they think that there's nothing they can do. And the fact of the matter is that they can take action. Again, betting against the debt, becoming your own central bank, realizing that the environment we are in is not sustainable. The debt at one point is going to implode. It's a monster. It's a Frankenstein monster. It's gone nuclear. It's going to go beyond that before we actually do get that implosion in the debt market. Suppressed rates have robbed people blind with any kind of an interest earning account, even high yield accounts. I mean, today, for example, at American Express, they offer a high yield account. High yield is 0.5%. It's a joke. You're getting robbed blind, and by their own admission, we have here in the United States inflation is 7.5%. I mean, you're getting robbed blind having any kind of a savings account, and people just think it's okay. They just take it. They don't rise up. They're distracted. They're told to look here, don't look over here. You had President Biden this morning pointing at it's the war. They're the ones causing this. It's Russia. They're causing all this inflation. No, it's not. Has nothing to do with central banks that have gone crazy, printing trillions and quadrillions of dollars out of thin air, and they're buying assets with it. It's a global takeover by central banks. Forget about that war. The real war is central banks. They're the ones that are taking over the world without firing a shot, by deliberately inflating, by devaluing the currency, by strangling people. Nations have become slaves to their central banks. People have become debt slaves. It's a slave world, and it's going to get much worse before it gets better. And there's no end in sight to it. It's just going to get monumentally worse for people, unfortunately. They got to take action. You've got to be, like I said, I got silver all over my desk. I want to talk about silver and gold. Everyone knows I'm a bit of a gold nerd, and I love my silver as well. I'll talk about that in a minute. But one of the things you said is that the spike in the oil price is nothing to do with Russia-Ukraine situation. Are you saying it was going to happen anyway, and that's just the distraction? Well, I told people before the war that we were going to see crude oil. First of all, when crude oil was sitting at about $60, I said we're going to see 100. And of course, I was told I was wrong. There's no way the economy didn't collapse. Well, we hit 100. Then I raised my target to 125. We already hit that too. Today, I raised my target again. I think 150, 175. Now that we have the embargo here on imports in the United States. But, look, the fact of the matter is the world is going to suffer from what we're seeing over there. And all of this is deliberate. All of it is deliberate. The inflation that we're seeing is deliberate. The surging energy prices is deliberate. We're going to have food shortages. I am certain of it. It's already being talked about all over the place. This is a mechanism, yet again, to continue to destroy the world economy. That's the goal of central banks. They have no interest at all.
Why do they want to do that? Why do they want to destroy why do central banks want to destroy the world's economy?
Because they want to own it. They want to own it all. They want to buy it all. They want to be the lenders and buyers of last resort. That is their end game. That is their goal. When central banks were created over a century ago, their goal was to one day control the world via the financial system, to become the one world government. I mean, people can, read there's so much you can read on this. The Creature from Jekyll Island would be a good
I love it. Best book ever, ladies and gentlemen. If you want a great book, Ed J. Griffin, The Creature from Jekyll Island, read it and learn about history.
It's insane what we're seeing here. And like I said, this is a global takeover. And the central banks, look what they did. We who has the power to shut down the global economy? Well, when we had this whole COVID escapade here, they shut down the global economy and the market still went higher. How does that work? I've been telling people that the faster the economy craters, the higher the stock market's going to go. And the only reason why the market right now, the S&P 500 is down 15%, big whoopie-doo, off of an all-time high here in the United States, is because of uncertainty. The market's not really sure what's going on, but I can promise you that there's a lot of buying going on here. Investment banks are buying this market. They're looking for suppressed assets, distressed things. I think there's a lot of opportunity to buy things in this market very, very cheap at this point. I do believe it's still going higher because central banks are going to continue to inflate. That's the driver. The driver to everything is the fact that the banks are going to continue to inflate because they want to. Their goal is to continue to inflate. And Putin, either directly or indirectly, has allowed central banks to do exactly what they want to do. We are going to see global debt double from here rapidly.
Wow. Okay.
There's no doubt. And you're going to see inflation surge. I think people don't. I've been warning people that the inflation would come in waves. We'd get one wave, a second wave bigger, a third wave bigger. A few months ago, I said, get ready. We're going to see a tsunami. Well, that's coming now. That I'm telling people we're going to get a super tsunami, and that's already coming at us. We can't stop it. There's no way to stop. You see, all these wheels have been put in motion many years ago. When central banks decided to take over, basically fuel the debt bubble to reinflate a stock market bubble, to reinflate a housing bubble. What people don't understand is the debt market drives everything. This is why central banks have gotten in and decided to take the biggest part of the market, which is the debt market, and inflate it. By inflating the debt market, it has reinflated a stock market bubble. It has reinflated a housing bubble. And the fact of the matter is the Fed continues to buy mortgage-backed securities, providing artificial demand in an environment where housing has gone parabolic. It's all a game. So understanding all that, everything derives value from the debt market. So everything is a derivative as to what is occurring in the debt market. And we're seeing the ramifications of that. It's not going to stop as the global fiat currency race to the bottom continues. We're going to see much higher inflation. Crude oil, over 6,000 products are made with crude oil. Absolutely. So what does that mean for people? We're seeing crude now at 125, 130. When it goes to 140, 150, 170. I mean, there's bets right now on Wall Street that it's going to go to 300. I don't think that's out of the realm of reality. It very well could,
and that will pass down to the average man on the street buying basic necessities, because if energy prices are going up, if oil is going up, the end result is the end products will increase exponentially, hurting the little person.
That's another reason why people are going to start hoarding. People are going to start buying things, realizing prices are going to continue to rise. I've been telling people we're going to see food shortages, but we're going to see everything shortages, because people are going to say, okay, you know what? I better buy this now because next month it's going to be higher. This is a phenomenon that we've seen throughout history. People go out there, they want to dump these whatever bills they're transacting because they're losing purchasing power at an exponential pace. Yeah. It's crazy.
So that's happened before. We've seen it in Germany. We've seen it in Venezuela. Everybody has said in the past, it will never happen in the US. It could never happen here in Australia. It won't happen in these strong economies. But you're saying that the contagion is moving, and like a tsunami, it will engulf every country.
It's, of course, by design. It's going to engulf the world. This is all that. Nothing is by accident. This is happening on a global scale. People, it's funny. I talk to people every day, and they're like, "Oh, well, I wonder what it's like in this nation or in that nation." Well, it's the same thing. We're seeing inflating prices everywhere, and in other parts of the world worse than others. Unfortunately, I think Europe is going to get pounded worse, especially with regard to surging energy, and Russia's threatening to cut off energy going over there. Look, I just want people to be ready for what's coming, and they have to think, what does this mean for me?
Exactly. And that's, Greg, that's where I want to go now, because look, you've explained it very well. Inflation is not transitory. It's here to stay. It's going to get bigger. before we get into the more positive thing, because what I want our listeners to understand is, yes, there's a crisis, but there are opportunities for you, my friends out there, to make sure that you can ride the storm and come out the other side. And that's why I was really keen to get Greg to come on, because he's passionate about making sure that you guys have got these things in place. So, Greg, let's go into that. Interest rates potentially could go up as well. That's going to hurt people. Let's go on your view on interest rates. And then I want to go into, all right, what's the opportunity? How can people actually not profit from it, but secure themselves in this insane time?
The number one thing I want people to do is band together, is get together with like-minded people, realize that we're not each other's enemies, okay? This divide and conquer mechanism has kept people separated, but the fact of the matter is, if we don't band together, we're never gonna survive as an entire race of people. There's a war on right now, yes, and I'm not talking about Russia, Ukraine. I'm talking about a war on for your mind. It really is. They want to keep you controlled in every way they possibly can. They want to force you to do things that you don't want to do, and they're gonna get away with it too. So we need to, again, we are our greatest resource. I've told people that. It's not commodities, it's not, whatever it is, it's each other. And we need every Friday, I leave people off with 3 things: love each other, care about each other, be charitable. I mean, if we all adopted that, we wouldn't have things, we wouldn't see what we're seeing now. It's just so crazy. But, look, like I said, we need to be prepared from every standpoint. I think realizing that we're going to see surging prices moving forward, maybe it isn't such a bad idea to put some stuff away. I think we're going to have food shortages. I think we're going to see a massive energy crisis, all engineered, crisis to crisis to crisis. We have to always have the high ground. So start getting together with like-minded people, talk about these things. What can we do as a community? Maybe join a group of people. I don't know. There's got to be communities, centers where people get together. I'm not really sure how to do it, but people do need to get together with like-minded people. And then think about what, like I said, bet against the debt, become your own central bank, hold gold and silver, at least from a financial standpoint, because I believe we're going to see that movement of cash from bleeding out of the debt market, bleeding out of the stock market, going to go into commodities. We're already seeing that, but there's a lot behind that too, but we haven't seen anything yet. I believe sincerely when we get the implosion of the debt market is going to come, we're going to see commodity prices that people aren't going to believe. And I think basic necessities are going to be way out of the reach of most people, unfortunately. I think there's also the potential pandemonium on the streets on a global scale. This can get that bad. Do we have to be prepared for it? I think we should. We should always be ready for a worst case scenario. We should always have the high ground. Period. The end. I don't know another way to put any of this. But
all right. Well, what you mentioned being your own central bank. I love that. And by the way, governments will do their best to make sure that you don't become your own central bank, because it is about control. I've mentioned this in the past, but you held up a little silver coin there. And I love precious metals. You said silver is your favorite commodity right now. Come on, Greg, spill the beans. Why silver? I love both. I love silver and gold. And by the way, the gold price has started to move.
This is how I look at it, why I say that. I look at the Dow Jones Industrial Average in relation to gold first. Okay. I believe at one point we are going to get a massive crash in the stock market. And it's the bottom. We don't even know where the bottom is. I mean, at QE1, when the Federal Reserve started jumping in here, they started buying a Dow 6,000. It could have gone to 4,000. We don't know where the bottom is. Okay. Right now, the Dow is like a 34,000. I sincerely believe an 80% drop in the market is reasonable. I really do, because that's how hyperinflated everything is right now. Now, if we were to get, let's just say, for example, Dow 4,000 or 6,000, I think you're going to see a 1-to-1 ratio with gold. So you're going to get gold at 6,000 or maybe even 2-to-1, gold 12,000. And what does that mean for silver? I think we're going to get a normalization of the gold to silver ratio at, let's say, 15-to-1, could be less than that. So we're talking about silver at $400 or $500 an ounce, maybe higher than that. So that's how I look at it. The Dow gold ratio, gold silver ratio. And that's why I say I still believe that silver is so undervalued. It's
But
so
isn't there a disconnect now, Greg, with gold and silver in the markets? Or are you saying that they are still connected? Because, you go back years ago when people when gold and silver were money, right? But now there seems to be a disconnect. And we've also got crypto, which I want to come into in a minute. But is there really still a connection between the markets and gold and silver?
Well, it's all fake. I mean, have you ever heard of an environment where the hard asset derives value from the derivative? It's paper. When gold is dumped onto the market or even bought and you see the price go, it's not physical that's changing hands, it's paper. It doesn't exist. It's not an elemental chart. And everyone knows who's doing it. It's JP Morgan, the largest bank in the world by assets. They're the ones that rig the price. They've been caught over and over again, rigging the price of precious metals. They're not going to stop. And good, I say, let's take advantage of it. Until we get the implosion in the debt market, they're going to continue to rig the price. There's no price discovery, in my view. Right. Today, gold and silver should be exponentially higher based on expanding global debt. But this gives us opportunity to buy more. Countries around the world, Russia especially, has been buying gold like crazy for years. Yeah, it's no secret. Everyone knows it. But it's astonishing to me how few people, like you and me, we own it. Very few people own it. They actually
very few people.
People don't even know you can. They're like, wait a minute, you're trying to tell me you can buy a gold bar? Are you trying to tell me you can buy a silver ingot? Yeah, you can. Yes.
But you know what, Greg? They don't get it. They're more comfortable because they've grown up and they know, and it's like they look at what I call the funny money or funny currency in their wallet. That's what they're used to. They're not used to gold, and they don't like to part with this funny money to buy a piece of metal that sits in a box. Because they don't see any value.
They don't get it. They don't because they've been conditioned. They've been indoctrinated. Yeah. It's always an indoctrination process from when you're very, very young. You get an allowance. Your allowance is in coins and bills. It doesn't come in generally in the form of gold or silver. If it were, then
how would you best explain to people that don't get it why gold and silver should be part of protecting your wealth or even increasing your wealth going forward?
I just try to lay it out kind of like how we spoke about it already, but some people just aren't going to get it. And a lot of them are hindered by fear, and they say, oh, everything is just going to be fine. It's that, cognitive dissonance. They don't think that maybe something can go drastically wrong. Everything's going to go fantastic. It's great. It's fine. And they don't hedge themselves. They don't understand that, you got to be ready for the cycle to end, the risk on cycle, like we were talking about, going into risk off. I think it's going to happen. Don't know when. I don't even care when. I don't think about it. People always ask me, hey, Greg, when's it going? I don't know. I don't know, and I don't care. What I do is I follow the action in the debt market. More specifically, I look at the 10-year yield here in the United States. It's the benchmark. I look at that to tell me when the big one is going to come. And we're going to know very easily, in my view, when the big crash is coming, because we're going to see an uncontrolled spike in the 10-year yield. Let's just say 2%, 2.5, 3, 4%, very rapid, bang, 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 bang. And then you're going to see the market fall under pressure. That's how we're going to know. When you see a stable debt market like we have now, it's not a red flag. To me, the market looks like it's going to bottom out at one point here. Like I said, 50% off on the S&P, big deal. I think we're going higher.
So basically have a look at the 10-year bond market, and when that starts to move rapidly.
Right. And it's going to be a worldwide phenomenon. It's not just going to be here. You're going to see this everywhere. And because it's the same scenario everywhere with central banks artificially suppressing rates and driving cash into the stock market. The stock market can still take a significant hit without an implosion in the debt market, but the big one is going to be triggered by a debt market implosion.
We're running out of time, but I want you talked about being your own central bank, and you just briefly mentioned cryptocurrencies. People can get really hurt with cryptocurrencies. There's been a lot of talk about Bitcoin can go to zero. Ethereum is not a proper way for you to make sure that you're okay. What do you say to those people? What are your views on crypto? Is that just part of a diversified portfolio to have a little exposure?
I think people need to have exposure to it. I'm not saying people need to go all in on any one asset. I don't care what it is, but I think you need some exposure to it. Here's my take again. With cryptocurrency, with the whole space, if you look at the market capitalization of the entire crypto space, it's about equivalent to one Dow component, let's say like Microsoft. Okay.
Right.
Now, if in an implosion situation here, like, because that's really what I'm focused on. I don't care what the market does on a day-to-day basis, even a week-to-week basis. All right. I'm trying to stay on the right side of it. I trade around my positions. Okay. That's a whole other thing. But focusing on understanding that the debt is a hyper bubble and it's going to burst, thinking of where the cash is going to move at one point. Like I said, I think it's going to get on commodities, gold, silver. We haven't seen anything yet. I also think we're going to see it move into cryptocurrencies. And I think the market capitalization of cryptos can easily go 3, 4, 5-fold higher. So what does that mean for cryptocurrencies? They're going 3, 4, 5-fold higher, in my view. That's just, look, it's my opinion. I've been telling people to buy Bitcoin since around 3,000. It's around 38 or 39,000 today. We're worth 65,000. It's a very, very volatile space. You see, cryptocurrencies haven't been around long enough for people to really understand the trading characteristics of them. But I've tried to explain to people that 50, 60, 70% swings in the price action of crypto up or down is normal. That's what it seems to be. So it's not for everybody. You gotta, but I do think people need some exposure to it, honestly. So there's a lot of different cryptocurrencies out there. Bitcoin is my largest holding. I own a whole bunch of them. But Bitcoin's the mommy, it's the mommy. It's the mommy. So, and it was, I think if, like I said, people need to do their own research into this and find out which one is right for them. If I don't know which one to buy, then just buy Bitcoin. And you can buy in fractions. People, I can't buy Bitcoin. It's $40,000. Well, you don't have to buy it.
You can buy a Satoshi for $10.
Yeah, people don't get it, that they can buy it in fractions. So many people, when I tell people that, you mean, Greg, wait a minute. I don't have to buy one Bitcoin at 39,000. No, you could buy a 0.000001.
There's like 100 million Satoshis.
And then like the light bulb goes off in the head. You're like, wow, I got $2,000. I'm going to buy some Bitcoin with it, or whatever it might be. But a lot of people don't know that. They don't know it.
I love the fact that you want to educate people. Greg, I really want to talk to you again, maybe next month. But first of all, how can people, I mentioned, I want you to go and listen to Greg narrate his book, How to Become Debt-Free and Beyond Successful. It is on his YouTube channel. Just type in Greg Mannarino and have a look at that. He's traderschoice.net. Go there as well. But what's your Twitter handle? How can people follow you? How can they continue to listen to what you're saying and those potential red flags?
Well, my website for sure, traderschoice.net. You can Google me, my blog on YouTube. I do 2 every day during the week, 1 on a Sunday. I have a free newsletter. I blast out stuff all the time. I hope you subscribe to that. A lot of good stuff there. So it's easy to find me. I'm pretty much everywhere.
Yeah, he's everywhere, ladies and gentlemen. And also, as I said at the start, known as the Robin Hood of Wall Street, because he doesn't like seeing what's going on and how everyday people are going to be hurt ultimately by the stranglehold of the central banks, and how Greg just said before, this is planned. So you guys need to make sure that you plan, because things are going to get pretty interesting out there. Greg Mannarino, it's been an absolute pleasure to have you on Small Caps today, and I hope we'll see you again very soon.
Absolutely. Thank you.